Warriors. Let's have a great week. I'm Dale Pinkert. Welcome to FACE. You guys have to take a look at Andre Cardoso's work, his harmonic work, talking about covering every base, his harmonic work. So he has everything handled here, everything from the daily 4-hour with potential targets. I think that it'd be a good time to at least get into our trial. A lot of updates, a lot of things in either or scenarios where we could have some major moves occurring here. So here you have all of Andre's updates, all of his harmonic work. Then you have Greg's harmonic work, including crypto and the DAX and the S&P. Okay, so a lot of new updates, everyone. So arm yourself with intelligence and research before you click your mouse. And I don't think you could find the volume of quality work with different methodologies anywhere else on the net. So that's my extremely accurate and humble opinion. Hi, Dan Norberg, how are you? Kurt, everyone? Okay, let's take a look at a few things that I'm looking at. If you saw Blake's week ahead video or you receive our weekly email, Blake is talking about two major levels here in the dollar index. We're right in between it. He's talking 88.5 and I believe 92. Can't get constructive the dollar until we close over 92, or bearish a dollar until we take out these lows at the 88.5 level or so. My best guess is after last week's rally in the dollar, that this is just the first wave. To me, it looks like we're having some type of consolidation pattern. Maybe the dollar pulls back into turnaround Tuesday. I think there could be a wave back up towards major resistance here, which includes perhaps a short in the euro between halfway and 61.8 back. Euro is weaker than cable, so EG still looks vulnerable. Cable looking stronger. Although I can't fall in love with cable either. Think that, you know, this looks like maybe just an ABC. Well, the euro looks like it may have had 5 waves, and I'm a complete amateur. 1, 2, 3, ABC, 4, and 5, and now we're in a retrace mode. Everyone with me? You don't have to agree with me. Just want to make sure you're following me, and perhaps you put this in your memory bank. Give me a Y if you're with me on the dollar, euro, USD, and pound so far. Last week, I identified a potential low in Aussie down here at major confluence on the daily at 78.6. So even if it's not going to be a major move, I still think there's at least a wave to 7.5. I believe Blake likes it. We have some decent trades going on the pattern and play. And I want to just add a couple of thoughts. Greg is looking for $70 crude. Okay, Blake is long in the money on both Aussie and Euro Aussie short. Greg is playing the short side of S&Ps. They're down about 6 today. And I just want to talk about a couple of other things. So USD CAD down. Got back to 31. Not sure if this is it. A lot of people are looking for this to be a head and shoulders bottom. Even if it is a head and shoulders top, even if it is, why can't we have symmetry and get one more lift? If we get a lift in the dollar, get one more lift in Canada to give it symmetry up at 130. That'd be an area to watch. So with that in mind, Dan Norberg was talking about CAD yen on my Twitter stream a couple of weeks ago, looking for a buy, looking for a third drive on it. Where are we? Here we go. Never had that third drive. Still possible though. If we get that lift in CAD and CAD rallies, maybe we get one more shot down. Would take it under 80 towards 79.5. And then another trade that I'm looking at that a trading buddy of mine pointed out was Euro Kiwi. Take a quick look at that. And as you can see, it's setting up potentially a top here. We have here on the 4-hour a little bit of divergence and another failing rally. Looks like a descending triangle. But when you go out to the weekly, we had this first big break. And to me, it looks corrective after this big break where we could at least see possibly down to 65. It could be a decent trade here. So keep an eye on Euro Kiwi. 1 hour looks like we're putting in some type of flag formation back under 170. Would give you 140 pips. Maybe this is going to turn out to be a continuation formation. Breakdown under 170 gives you about 68.5, which is where the moving average came in. That was 65. Here's your daily, 69.35, 68.5. So to me, all of this work since the high that we had into the new year, this initial break, maybe this is ABC and this is another ABC for B, and we're going to get a, one more thrust down to 65 to complete. So those are a few of the ideas I have. Gold's getting a nice pop today. I'm not ready to call that a bottom. Really got hammered. So if we have one more wave up in the dollar, maybe there's one more leg left in the gold to the downside. Let me just take a look at it here, up 850. So very possible that we're still going to try this 1290, 1280 area here. This was a nice little pullback, kind of flush out. So I would be very interested in gold down here between 1290, 1270. I'll be taking a look at it. I want to see how the shares respond to today's action. We have a great guest today, Saeed Zeman. The last time he was here, his interview got close to 2,000 views, so he has a pretty good following. Looking forward to talking to Saeed. In fact, he was right about a couple of calls that he made when he was with us last time, alongside a euro. So we'll see what's on his radar. And with that being said, I'm going to just hand it over to Blake and see what Blake is thinking coming into this new week. I think the big day, obviously, is going to be Friday on the NFP. So, let's make hay before Friday morning.
Hey, good morning, Dale.
Hey, buddy, how are you?
Good. It's Easter Monday in a lot of parts of the world. That's why the ranges have been so tight. And it's been close. Yeah, it's been pretty quiet. So I mean, we'll be expected to get back to full
craziness.
Full craziness or volatility come tomorrow. I think the euro just got into new highs, and we're going to take a look at all these majors here. I think it, probably taking like a careful look at them is going to be important today. But overall, it is a long weekend. I think there's you get that long weekend hangover, and people are.
Yeah, I have one.
Do you really? not me, my man. Not me. But I tell you what, I'm a couple pounds heavier. I ate a lot of nasty. Well, I say nasty, really good, very tasty food yesterday. But yeah, definitely not going to help my girlish figure. That's for sure. So it's one of those things where I slept pretty well, though. Let's put it that way. So did you have a nice I guess I know it's a long weekend for you. I'm assuming you don't celebrate Easter, but a nice long weekend.
Oh yeah, I celebrate it.
Oh, you do? Okay, all right.
I celebrate it, but even though I took Friday off, Blake, I did hear that interview that you did with your friend. It was very inspiring. It was a great interview, and I didn't know some of the details, and what my biggest takeaway was how you could, at times, people could never even meet each other, but how they get to know each other just online, and the support that the community gave. What was his name again?
Amir.
Your friend.
Yeah.
Amir, the support that the community gave Amir when he was going through such difficulties. And, you know, that's really the beauty of the community, is how they come together, during times of need for someone else, they step up. And, you know, I think that's a testimony to the kind of people that you've attracted to your trading group over the years. So good, giving spirits, you know.
It was pretty, looking back, pretty surreal and pretty amazing. I have to admit, Ziggy, who's also in our chat room, and he's been a mainstay in our community for many years, and which is a gentleman that I've met in person. When he was moving from Las Vegas to New York, he stopped in Phoenix, and we had lunch
with Zig. I met Zig.
What's that?
I had breakfast with Zig down here in Carlsbad.
Oh, cool.
Yeah, great guy.
Yeah, he's a super, super great guy, and he had recorded all those interviews with Amir. And so if you go to the old Wise Trade, the Ziggy had a Wise Trade channel, and still does actually, on YouTube, and you listen to some of those old interviews with Amir, he was undecipherable. It was really tough to listen, not only from it was hard to understand exactly what he was saying, but just the pain he was going through. Yeah, I mean, it was just like, heart crushing. And we, as a community, we I didn't want to hold personally any funds of his and raise money myself and be responsible for it. So I had his wife set up a PayPal account, and I had a post-it note on my go-to webinar in the morning, every day for, like, I want to say probably 3 years. When people would come to the Morning Edge, it would say, we'll be starting in a few minutes. Thanks for your patience. If you'd like to, contribute to Amir Dullah Shahi's, family, his PayPal address is here. And we raised a lot of money over the years for him, so he could pay his mortgage. Fortunately, he never lost his house throughout this whole situation, but he came really close. And I'd like to think that we helped contribute to him and his family having a bite to eat when they needed it, and not losing their home when they definitely didn't want that to happen to him. And
well, he gave you guys credit for that, of helping him not lose his home. And I'll tell you what, Blake, I had some help over around 4 years ago, when I wasn't able to work and going through different therapies. And it's amazing. A lot of people have a lot of negative things to say about, and I'm not saying there aren't barracudas and sharks out there in this industry, but there are a lot of giving spirits and people who really care. And, that's why I love this community. And I think everyone should find, if not here at ForexAnalytix, become part of a community, because it's going to support you and help you become a better trader, but also a better person.
Yeah, absolutely. And it was to me a very heartwarming experience from the community aspect, and being able to witness it. Anyway, great interview, guys. If you guys haven't listened to that from Friday, because you were out for Good Friday, make sure you go back and listen to the YouTube recording that's posted on our YouTube channel, and check it out. It's a very heartwarming, in my experience, heartwarming and inspirational story. So make sure you guys go tune in. All right, let's talk about the majors for a bit. And before I even go into the majors, let's actually go over to the dollar index. And I think the dollar index is important to look at, because as you guys can see, the dollar index is still in a consolidation. We're obviously in a very big downtrend. I mean, you know, any which way you slice it, you know, here's your daily chart, and you know, we're obviously in a really strong, still in a very strong downtrend. Obviously, we've seen a bounce middle of last week to the 90 cent level or just above where we're trading right now. But as long as we stay below 91, it's still, you know, in a bearish trend. We have to get above 91 before I even, you know, start remotely thinking, okay, this dollar is bottomed. Because right now, I mean, actually, let me take that back. It's consolidating, but I don't feel like the dollar has. I really don't think that we're in a situation to say, okay, the dollar is reversed until we break above 91. Now, the euro is still trading heavy. It's trading heavy, but at the same time, it's really, you know, longer term. I mean, we're still trending higher. I mean, you know, we're still, you know, getting to, you know, we're near support. We just broke higher out of a very tight range overnight. It's not like, you know, it's not like we're seeing massive volatility because Europe's out. Most of Europe is out right now. So you got North American traders that are coming in, you know, trying to, you know, push the FX market at least a little bit. But overall, you know, it's the dollar still looks, you know, still range bound at this point, and the euro, you know, pushed out of resistance, you know, just slightly, but still, it's not like, you know, not like we're not like going anywhere quickly.
Your longer term chart, Blake, I know you're a big fan of false breakouts. Your longer term chart looks like deja vu from the last high that we had a pretty good correction from that we had last week, like a little false breakout.
This one right here? Yeah.
This one, yeah, it looks almost like a fractal of what happened a month before that when we had that false breakout. Up at the
it does. It does, and which could, you know, could lead us below, you know, down to this low right here. I mean, that this move here could end up being right here, and yeah, I mean, it very well could be. What I would think in the euro as we are, you know, recovering here is, how do we react once we get back up to like 123.70 or so? You know, what's the reaction from here? And it's hard to, you know, I look at the market right now and it's hard for me to say, you know, oh, I'm extremely bullish the euro or I'm extremely bearish the euro. I could see when I can argue, you know, I could see the euro at 122.50. I could see the euro at 124.50. That doesn't give me that much of an edge, you know, when I can argue both points. And so that's, you know, that's where, you know, I have to look at where we're at right now regarding the euro and say, well, you know, are we, you know, is this a good time to be long or short? I mean, and that's why if you watch my week ahead video this week, and I was, as soon as I stepped into our chat room this morning, Nidish was like, you know, I saw him, he wrote before I got there, he goes, yeah, Blake didn't have much to say on his week ahead video. And I really didn't. There's not a whole lot to say from a, you know, trading standpoint. It's like, well, what do you do here? I don't really know. I mean, you know, as I mentioned to you, before, and on the week ahead video, and I'll mention to you guys right now, it's really the S&P, and as long as the S&P trades above the 200-day moving average, I have a really hard time. You know, I know we're pretty close to the 200-day moving average. You can see I have alarms set up and everything. I've got alarms on the 200-day moving average. I got all, you know, they're all over the place because I want to make sure I'm notified, you know, around those levels if we break. But while we trade above the 200-day moving average, I don't really know what to do here. I mean, you know, I guess it's like, okay, well, you know, maybe we're long some yen, or let me take that back. We're short some yen, long some yen pairs, but at the same time, I look at the dollar yen and like, well, you know, as long as we're above 107 or below 107, I'm not really bullish either. So it's a tough place to be to make really directional calls at this point. Does that make sense, Dale? Well, maybe it, yeah, well, I know you.
No, I'm here.
Okay.
I understand, you know, strongly neutral, hard to have a lot of conviction about what to do. And, you know, the markets are in that position from time to time. And I guarantee you that within the next few days, you won't feel that way. But
yeah,
at least you recognize it now, and, you know, you just let the market tell you instead of forcing it. Someone on Twitter said, you know, forcing trades like forcing a fart. You get the same result, and it starts with an S. And anyway, so don't force anything.
right.
Let it come to you, huh?
Right. No, I mean that's kind of the approach you have to take right now. It's like, okay, well, you know, I don't see any really great setups, and so while we're, you know, waiting for the market to set up, we've got to, what the hell is, sorry, this is, let me do a couple of things here. You know, while we're waiting, we just kind of got to wait for those setups and wait for those opportunities. And I just, right now, I don't see any great opportunities that are jumping out at me saying, oh, well, you know, hey, I've got to be, you know, really bullish the dollar, really bearish the dollar. You know, just there's nothing really great here at this moment. You know, I guess after the dollars, you know, I look at the dollar here. I guess after the dollars rally over the last week when we squeezed, you know, at the end of month, end of quarter, you know, could the dollar pull back into this triangle? I think that's probably, you know, the only realistic thing that I'm thinking right now is that the dollar index might pull back and the euro could, you know, pop back up to 124 and the pound maybe back up to 141, 142. But where's that leave us? You know, does that, you know, it's not like the dollar's in breakout or breakdown territory. I think you just got to wait for it at this stage in the game. Well, now we do have, you know, as you pointed out, we have non-farm payroll, which is going to be at the end of the week, which should be, you know, give us a little bit of volatility, I would think. We also have the RBA tonight, which, you know, the RBA is expected to keep rates unchanged, and I'm bullish the Aussie as long as we trade above this, you know, this channel support here. I think a lot of people got caught shorting the Aussie dollar. I believe that was on Thursday of last week. A lot of people got trading short the Aussie. So I think the Aussie is, you know, as long as it trades above the 76.40, the risk is, you know, for a bounce. And as long as equities continue to stay above the 200-day moving average, I don't think the Aussie's, you know, too bearish here. I think the Aussie has the potential to still bounce, you know, but we have to see some price action that suggests that we're really going to bounce here, and I think you got to get back above 77 cents, which isn't far away. It's obviously it's only 20 cents away, or 20 pips away, 20 pips for us to really start moving, but we have to see it first. You know, you have to see the Aussie dollar really pop above this resistance to suggest that a near-term bottom's in, and maybe that doesn't come until after the RBA this evening, if it's going to come. You know, let's take a look at the Kiwi. The Kiwis, you know, we're right in the middle of this apex of this you know, wedge that we're developing here. So not a lot of clues there. The dollar Canadian, I still think it has the potential setting up this big head and shoulder pattern, but you know, while we're above 128, you know, it's hard to be too bearish. the Canadian at this point. But you know what I'm actually surprised about is the dollar Canadian did not break higher after the weaker. I think it was inflation data on Friday. I'm surprised that we didn't you know, bust out of this little channel that you see here. And you know, and there's obviously, you know, a lot of news surrounding NAFTA and whatnot. And you take a look at the peso, and the dollar Mexican peso is trading really heavy. So if the dollar Mexican peso is still trading heavy, will the dollar Canadian can continue to trade heavy as well? I think that's possible. There's one currency pair in the event that the dollar gets bullish. There's one currency pair that we don't cover on ForexAnalytix that I think we need to pay attention to, and I trade from time to time, is the US dollar Swedish Krona. If you take a look at the US dollar Swedish Krona, this is, like I said, this is not a pair that we cover on ForexAnalytix, but it is a pair that I trade from time to time when I see it. This dollar Swedish Krona, in the event that the dollar starts to rally, you know, so let's say the euro breaks through 122 and it really starts to, you know, show some signs of weakness, this dollar Swedish Krona could be a real big, you know, breakout to the upside. It's really outperforming its peers, and so that's something that I'm paying attention to, me personally, because it is something that I will trade if the dollar really starts to firm. But you know, we have to see the euro dollar really crack below this longer term trend line here and really start to reverse in order for me to pay real close attention to that US dollar Swedish Krona. But that one in particular, you know, looks ripe. It looks ripe for a squeeze, you know, especially after being, you know, beat down over the last year. You know, this thing could really start to squeeze higher if we see some dollar strength. But you know, I have to see it. I have to see it come through all the other majors in order for me to get really bullish here. But that's something that obviously I have an eye on, that I'm keeping an eye on. So with that being said, you know, those are the majors, and you know, I'm not excited about anything really other than, you know, the Aussie, as long as we stay above this these lows here. But you know, it's not trading particularly well at this moment, and probably will, you know, continue to trade relatively range bound while we're waiting for the RBA tonight. And I'm not, you know, I don't think we're going to get any type of really spectacular activity out of it today. And other than that, you know, that's pretty much it. I'm just kind of waiting for the market to show me its hand rather than me assuming I know what's going to happen. I need to see the market prove to me, you know, which way we're going. So I think Steve is joining us from the island of Rhodes in Greece. Steve, are you there?
I'm here, Blake.
Hey, good morning. Your internet sounds great there on the island of Rhodes.
It's not the best here because, you know, I'm in the medieval town of Rhodes, so the you know, the infrastructure is not the best, but I think it should be enough for the webinar, or at least I'm hoping.
Yeah, you sound great. So how's Rhodes treating you?
Yeah, as always, it's beautiful. The travel here wasn't, you know, we had a little bit of a rough experience in the first few hours because there was quite a wind, and you know, it was the sea was kind of rough, and Jason managed to throw up a couple of times, and you know, it went south from there. But other than that, yeah, we haven't slept much, etc.
Oh man, that's no good. Well, hopefully you get an opportunity to sleep tonight.
Yeah, that's what I'm hoping as well, to make it up. Yeah.
Well, as you can see, the markets are pretty quiet. There's you know, everybody's observing. You know, Easter. No, Easter Monday is it observed the same in Greece as well?
You should have known. You're a North. You're baptized in North.
Yeah, Greek Easter. Never mind. What am I talking about? That's next week. Holy cow! Right?
There are, you know, because both of them actually are not fixed in time. So it happens that some years they coincide, some years they might have 1 or 2 weeks of difference. In this case, it's the upcoming Sunday for us.
Yes, it's. I actually knew that. I don't. It's. Remember, it's still very early in the morning, and I've been up since 3 o'clock this morning. So
I know
at my time. So it's.
I
I'm like, oh, Greek Easter. Greek Orthodox. Holy cow. So anyway, well, I left the majors for you to cover, and I'm sure Stelios is here too, and probably will chime in with you about. Hey, Stelios, how you doing?
I'm very good. How's everybody?
I needed some time to to adapt some things. Have you? I want to ask you a couple of questions, Blake, because I only caught like the last 10 minutes. Have you talked about the metals? Because I actually have quite a few things to talk about the metals. Because
no.
Okay, good. And you said you left the majors, meaning Euro, cable, etc., right? Because
all I did is I really just talked about the dollar pairs, and it's a lot of sideways price action at the moment. So not a lot to talk about, but I think there's some opportunities in these crosses that are developing. So.
Yeah, I think metals also are, are trying to break out at some point. I think I see some volatility coming back, and after such a long period that they've been range bound, I really feel that we might see something happening finally in these markets as well during the next few days or a couple of weeks.
Yeah, well, let's hope we do get some volatility, because things have been really quiet for the last few days. So hopefully, we see some decent volatility over here. I'm gonna pass it over to you guys, and let me know if there's anything I can do for you. But I hope you're having a nice time there in Rhodes.
Okay. Thank you very much, Blake. Thank you. I'm sure we will.
Have a good session, Blake.
Thank you, guys. Good luck.
Hey, Steve, I just want to clarify that you're on the island of Rhodes, not Rhode Island, the state.
Yes.
Good choice. And I told you to bring Dramamine for Jason, buddy. We talked about this.
Yeah, but something from my personal experience, Dramamine isn't really helping that much. I mean, from my personal experience, it makes you a little bit like a vegetable, and I've even had incidents that I had people throw up even though they had taken Dramamine. So I really don't think it's much you can do against nausea. Plus, we didn't know if he's going to get seasick, because we had no previous incidents. I mean, he has traveled before by boat, but the sea was extremely calm, so you can't really know. He has never gotten seasick.
Kareem is saying he's been to both. Before you get to the market, Steve, do you know a lot of people are showing some concern about this new regulation coming out of the UK that might make it more restrictive for people to trade, called the ESMA? Do you know anything about that?
Does it adjust available leverage?
Yes,
okay.
That's the one. Yeah, leverage levels are going down, and it's basically becoming much more constrained in terms of what you can do or what you can't do.
Yeah, guys, I've said that before. We had a little bit of this discussion with Trent. Trent is the person that is also responsible for our reimbursement program, which, by the way, we haven't said it recently. I need to remind everybody that if you are a ForexAnalytix subscriber, or if you want to become one, you can really participate if you're not in the US in our reimbursement program, and in essence, get part or all of your subscription being paid through that. So we had this discussion with Trent. I understand that obviously reducing the available leverage traders have is something that might dissuade some people from trading. But from my personal experience, with few exceptions, because of course there are always exceptions to any rule. Reducing available leverage is a step in the right direction. I think that, with the exception of very good scalpers, I think that using more leverage usually leads to people blowing up their accounts. So
what are they taking it down to? 10 to 1, 5 to 1, or what? leverage?
I think some.
That's a good question, but definitely 50 to 1 is not going to be on anymore. So
yeah, I think I think something like 10 to 1. But let me tell you something, Dale.
It's like that in the U.S.
I've used more than 5 to 1 leverage through so many years of trading, really a handful of times, only a handful of times. Yeah. So, and that's what I would advise to the vast majority of people as well. Very few people anyhow can take a $5,000 account and make a fortune out of it. If you try to do that, as I said, with the exception of people that are really, really very short-term traders, I mean, not only scalpers, but like short-term scalpers, that I understand that for these people, only for these people, very, very high leverage is a tool of, that is quite important. I think that the rest of the traders should stay away from using excessive leverage. In the long run, it will probably do more harm to you than good. So I know that, for us, it's, even for our service, since it's connected, to, let's say, how much traffic brokers have. Theoretically speaking, it's a negative change, but in my opinion, as a human being and as a trader, I think it's a step to the right direction, honestly. By the way, Stelio and Dale, I'm going to need both your help because in this case, I'm not, on my desktop computer, so I don't have multiple screens. I'm on my MacBook. So instead of having to go through virtual screens and show questions, to everybody, because people use their real names as well, I would like you to transfer to me questions so I can go over whatever people want to see. Of course, after I go through a few of the majors and especially the metals, because as I said before, I think that the metals have started showing some signs that volatility might be coming back. And in a sense, they might be about to make an attempt to break through the recent ranges and finally produce some kind of a follow-through, which is lacking for quite some time now, for months, I would actually say. Okay, I have Palladium up here, although Palladium is not the one I wanted to show now, but my short here is working very nicely. I'll keep Palladium. I'm short since 1047. I've already closed half of my position at 1000, and my next target is 910. I really think that it's moving in the right direction, especially considering, let me go to gold, especially considering the fact that gold and silver have been in ranges, and on occasion they had some very big moves to the upside, and Palladium has completely ignored these kind of moves and has kept depreciating. So gold is back in the middle of this triangle, but in all honesty, as I've said, the more time we spend consolidating here, I think the higher the chances of a final push to the upside for at least one more move towards 1400. Gregor was actually showing the same thing through his Elliott waves point of view on Friday, so I was quite happy that we're seeing the market in the same kind of manner. I do believe that this can has higher chance of being resolved to the upside, and today we're also seeing some attempt. I'm not of course advocating that people should be opening positions in the middle of the triangle, but I will be inclined to believe a move above this high and the triangle, in which case I might actually try to to align myself with that kind of a move and expecting follow through, probably buy some on a breakout above 1357. So this is something I have in mind. And silver, on the other hand, as you see, has a formation of a descending triangle within a larger formation, of course, because if I zoom out, you can see here that we remain within a larger consolidation. So obviously it's a market that hasn't been producing much, but in my opinion, if we break above 1675, we could at least see a move towards the blue trend line that you see here, which is at 17.5. So silver looks good to me as well, as long as we finally close above 1675 on a daily basis. Today's price action is very nice. We have a very nice bullish engulfing candle, a long one. as I said, wait for confirmation, but it looks like it might actually produce that kind of a move. So metals are more or less the only thing that copper. Let me go over copper as well. If you remember, we had talked about copper when we were testing this confluence of supports, and they said that, listen, I know that it is quite hard to advocate for a specific move in the markets when the price action starts getting worrying. But copper hasn't, my outlook on copper hasn't changed simply because the move lower has been slow, it has been choppy, it has been overlapping. In essence, it has been everything you want to see from a corrective move, and the fact that we actually reacted very nicely from this confluence of supports adds fuel to the possibility that this might have been a correction. And even if we do some extension here, I wouldn't be surprised if that was an equality target being hit. Let's see here. Let me readjust. Sorry, because on the MacBook, it's not so easy. Okay. Let's see. So if we take this here, and we take that up here, equality target was at 297, which was exactly the closing low that we had, the daily closing low that we had. So I think this market looks quite good. Copper looks quite good. It remains constructive. And I think that if we actually close again above like 315, we're going to be pushing to new highs. So the metals in general, besides Palladium, the ones that we've been looking at, are still quite healthy. The other ones are consolidating, but they have a positive outlook as well. Now let me go to crude, because I know that people are frequently asking about crude. I think that the recent price action in crude is a triangle. At least it looks more like a triangle, because as I've said, in consolidations or in corrections, you cannot be sure of the structure, since the very start. But this looks like a triangle to me, which means that I think a resumption to the upside for a push towards perhaps 69. 69 is the 127% extension of the last corrective move lower we had, the one that started from almost 67 down to 58. I think that a push towards 69, if not higher, like 70-20, which is the 141.4 or the 161.8 at 72, any of these areas I think is a good upside target. Of course, I always try to keep minimum expectations, so 69 is ideally my target there. At some point, after we see a reversal from new highs, I might be interested in shorting crude, because I know the positioning has been quite extreme. I know that the market is becoming week by week even more bullish. So at some point, I think crude is going to have like a larger correction to the whole uptrend that we've seen since finding a bottom here at 26. But I think we're not there yet. I think that we will first be seeing new highs before anything like that happens. Now, I wouldn't change my opinion if this proved to be, instead of a triangle, something like a bull flag, right? So even if we push a little bit lower towards, let's say, 63, 62.5, I would still not change my mind. I'm saying that in advance, so you don't think that you understand that triangle is not the only interpretation that will keep the outlook for crude bullish in my mind. But as I said, triangle is a very likely interpretation in this case, and that's how I'm seeing it for now. Now, a very fast look at Bitcoin and Ethereum. I know that Blake spoke about them. We've been looking at them. Listen, both of them look really bad. They've broken below some very important levels. 400 was a major level for Ethereum. the fact that it's just consolidating there in a manner that's definitely not constructive tells me that cryptos haven't found a bottom yet. So for people that are actually looking to buy, I think that there are no signs yet in the market that this is the place you should be stepping in. And I've been asked many times, like Bitcoin moved from 20,000 to like 8,000 to 7,000 to whatever. It depends on where the market is. Don't you think this is an opportunity to buy something? And my answer is that I would first want to see a technical reason to do so, and a very strong technical reason, simply because I have no reason and no evidence to believe that the intrinsic value of any cryptocurrency at the moment is anything higher than zero. We still don't know what's going to happen with them. So as far as I'm concerned, they have an intrinsic value of zero, which means that if you decide to buy them, you need to be ready to accept the premise that you're simply buying for speculative reasons, understanding that if something goes wrong, there is not going to be any value you can retrieve afterwards, right? This is not a precious metal, for example, that you can sell. This is purely thin air, a lot more than fiat currencies, because at least they're backed by government. So for many reasons they can't go down to zero like immediately. I mean, they can potentially if something major happens, but for cryptocurrencies, it's a lot easier for that to happen. Okay. Now, let's have a look at a few more pairs. And Dale, you can, yeah.
Steve, before you continue, let me just say we've got a couple of questions from people asking when Said is going to be on. He's going to be on the hour, so in about just under 15 minutes from now. And
exactly, yes.
And our friend Stephen said correctly that the SMA regulation are Europe-wide and not just for the UK, and the leverage is going down to 30-1. I wasn't aware of the exact number, but yeah, it's 30-1. So
which to be honest, in my opinion, 30-1 is
still a lot. It's still more than enough.
A lot. It's still a lot. Yes, it's still a lot. I honestly believe that if 30-1 is not enough for you to succeed in what you want to do, I don't think that leverage is your problem. As simple as that.
Yeah,
right.
Exactly.
Now, I wanted to show USD NOK for a specific reason. We were looking this potentially as a triangle. Okay, you can see here the intermittent blue line I had as a resistance, which we broke above it in a very decisive manner last week. Obviously, this invalidates the possibility of a triangle. So, since I do believe that the USD NOK is going to be resuming to the downside at some point, what is my next possible interpretation? It's that of in essence, of an ABC, right? So the good thing is that if you see here, if you draw the parallel, you'll see more or less that an equality target from the first corrective leg higher comes more or less at the 61.8 of the last move lower, roughly, let's say 810, 812. So ideally, I would want to, first of all, even if we go down to 4-hour chart, although you don't even need to see that, you can see it from the daily, you can see that this recent move after the strong uptrend we had there is definitely corrective in nature. Okay, so I'm expecting USD NOK to at least produce one more leg to the upside. Ideally, I would want to see it stall anywhere between 8 and 812, and I will be very actively looking to be short the pair up there. So, I'm really crossing my fingers, hoping for another strong push higher for me to gain some exposure again. So I just want to show that because it's something that's under my radar. USD SEK was also under my radar. Stupidly enough, I didn't get involved with that, although I was monitoring it daily, believing that it's going to do exactly what I had drawn here. Anyhow, it doesn't really matter. I can say that in the short term, it looks like it's consolidating once again. I'm viewing this short-term consolidation obviously as a continuation pattern, which means that I think that another retest of the 852 area, which I was looking, if we broke above this bull flag, I think we will actually see that. I'm also going to be monitoring USD SEC. I'm probably interested in gaining some exposure there, although between the two of them, I definitely prefer being short the USD NOK. Okay, so if concurrently I get an equivalent opportunity to be short one or the other, I'll definitely go for USD NOK. Okay, so Stelio,
Yes.
do we have any questions that I should? Yeah, go ahead.
Yes. Well, we don't have very many, but our friend Tonya is asking for indices. So if we could cover maybe
Absolutely,
and DAX.
absolutely. Yeah, absolutely. So here's the SPX. Nothing has really changed. I mean, we are still holding the confluence of the 200 EMA, which is also, coincidentally or not, if I zoom out, you can see it's also the channel support that the market was, this channel was respected by the market for a long time until we actually overshot above it. And now we're retesting it. So it's, you know, we have a confluence of supports there, and there is no question about that. If we break below here, we should see an extension lower. We had this discussion on Friday with Grega. I think personally that the two levels of interest for me are 2480 and 2400. If I see a good reaction from 2480, I'm going to tend to believe it. If I see a good reaction from 2400, I'm going to tend to believe it. I think that the market is going to make it at least 2480 if we break below here. So bottom line, if we do close below here, I think that there is an opportunity to be short again. Now, for me to believe that there's an alternative, which I do believe there's an alternative, it's the triangle one. I need to see prices get bid once again, because let me see if I can easily draw here. Because if I see something like this, so if I see the market consolidating, sorry, because as I said, I'm on my MacBook and for some reason, oh, there we go. Okay, good. So if we see the market consolidating in the short term here, so near the channel support, I'm going to start believing that the market is about to break down. Okay, so bottom line, if we want to take the interpretation that this is just a large triangle, I would want to see the market getting bid again, ideally pushing at least the 2700 once more, the 2700 area once more, and then you know, the bigger triangle interpretation remains valid, so we might not see a lower low again in this market. But if we keep seeing the indices consolidating near the lows, I think that this is going to be a formation that's going to break down. And as I said, if that happens, 2480 and 2400 are going to be the areas I will be looking for. Okay, so this is what I see having to do with the SPX. The Nasdaq, more or less, is a mixed bag, because the Nasdaq actually managed to push the new high, which was obviously a false break in this occasion. So the question is, what happens from here? I think that if the SPX breaks down, the same thing is going to happen with Nasdaq. We have shown the past couple of weeks that some of the Nasdaq stocks that have been actually the steam engine of you know, the whole US stock market move higher have been suffering, and technically speaking, they've been very weak. So I would really not find it weird if the Nasdaq actually showed more weakness in case we actually break down than the other indices. I need to remind people also that we put out a new blog on Friday, understand that it was half a holiday in essence. So many people might not have noticed. If you go to our blog, It's free for all, by the way. It's just www.forexanalytix.com/blog. You'll see that the last blog post is about that volatility is back, but have we seen a top? And if you go here, you'll see that Stelios is writing some stuff on the macro perspective, and then Blake is talking about his technical outlook, and then we have a very nice analysis on 3 different time frames from Andre, having to do with harmonics on the SPX, right? So harmonics analysis on the 4-hour chart, on the daily chart, and on the weekly chart. So I think it's a good idea. You have a look at it. As I said, it's free to read. You just have to go to our site and click on the blog. Now, let's have a look at the DAX, and let's have a look at the FTSE as well. And let me remind you what I've said here. The DAX remains, on one hand, supported by this ascending trend line. Let me zoom out so you can see it. There it is. And on the other hand, it's capped to the upside from this trend line that you see. It was actually a trend line support of an expanding triangle, but it started acting as a resistance once we broke below it. Seeing a rebound from here, from the 11,800 area, which was also horizontal support, was no surprise. But on the other hand, I can really not turn bullish as long as this trend line is capping. So I wouldn't be surprised if I see the index catching a beat for a few days and then rolling over once again. Now, the question is, what is the target in case we roll over once again? I think that the next logical target is roughly the 11,400 area. Okay, so if I see any signs of the index stalling below this trend line, I'm going to tend to believe it, and I'm going to tend to watch for lower prices. Okay, so I think that it's definitely not out of the woods yet. Same thing applies with the FTSE. The FTSE actually was the only index that produced a new low from its consolidation, and I mean quite easily a new low, as you see from here. It produced a triangle, and we saw a very strong rebound. But this rebound is going to be tested now, because as you see today, we're testing once again an important support area, this time as resistance. It's the 7,100 area. So be careful. If we see the index rolling over from here, it's going to be a bearish signal. And why not? We can easily see a new low from here. So quite critical area in my opinion. And as you see, intraday, we've already seen a reaction from there. So the index, after testing this area, has already pared back, part of its gains. So I'm closely watching this area, and we see what happens from there. Celia, what other questions we have, mate?
We only have one. Actually, we have Kerem asking for oil, but you covered oil, right?
Yeah, absolutely.
We have Raj asking what our expectations are on the RBA rate decision. He's saying quick spike low, ? So, I mean, I can answer part of this, and then you can have a look at the Aussie dollar.
Absolutely. Go ahead, answer the macro part, and I'm going to talk about the chart.
The Aussie is actually very interesting because in terms of economic data, it's been doing quite well. Inflation has been around 2%, 1.92%. Employment, if you remember, December 17 and January 18 were hit very good numbers in terms of employment change. Overall, it's been good. Now, there's one big problem. It's linked with China and what's happening between the US and China. So the RBA might, in their statement, talk about this, and depending on how much emphasis they put on this, it might put some pressure on the Aussie dollar. Personally, actually, it's difficult to say what they're going to do, but if it wasn't for these pending trade wars, the Aussie dollar should be a pretty stable currency. I don't see anything wrong with Australia in terms of its economy, etc. So, but it's a big risk. So you're kind of betting if you go into the RBA with a position. It's a bit of a gamble.
Yes. Okay, Stelio. let me show now the technical picture. First of all, the technical picture, which is very important to zoom out. As you see, it's one of a very large and prolonged correction to a very strong move lower, right, to a very strong downtrend. So at some point, I'm expecting that this structure that you see here between the two, this triangle in essence, is going to fail to the downside. Now, the question is, okay, does that mean it's going to fail from here? Absolutely not. It might even push to new highs to retest that trend line resistance before rolling over at some point. So what I can tell you for sure is that this area at 76.40, so it's actually a little bit lower than where we currently are, is a triple confluence of supports, quadruple actually. It's this ascending trend line, which comes just a little bit lower. It's the 78.6 of this move higher. It's this previous triangle's resistance. You can see how important this red trend line was, that acted as resistance multiple times, that might act here as support. It's also a horizontal area of support resistance. So I can tell you one thing for sure. This is not an area that I will be selling, because selling at such a strong area of support makes no sense. On the other hand, though, I have to tell you that I don't see anything bullish on this chart yet, right? So even the recent price action here, doesn't advocate for any big rebound. So the only reason I'm not long is because I really don't have a signal to be long. But on the other hand, I'm seeing this strong confluence of supports. So technically speaking, a very bullish reaction from whatever the RBA decides to do is going to be one that's going to bode well with the technicals. So for me, I would like to see two scenarios post RBA, and then you can start the interview. I know that it's time. One reaction I would want to see is a false break lower, like in the short term, and a reaction following that to, in essence, reverse any move to the downside, which I would like very much, and I would consider buying. The other one would be an outright strong reaction from the market higher, which is going to hold up, in which case, then I'm going to be looking for a retracement to buy, having, higher confidence that the chart actually wants to turn around, right? So these are the two types of reaction I would be looking from RBA that would make me interested in participating in the market. Okay. So that's it. Thank you very much, Dale.
Enjoy your trip. Go have fun.
Thank you very much, mate. I have some work first, but yeah, I'm going to combine.
Yeah, go for a swim. What's the water temp out there in the ocean?
Not so hot yet.
Yeah, you need a wetsuit? Too cold?
Not that cold, but it's not enjoyable
okay.
yet.
They'll wake you up. All right, Saeed.
Yeah.
Thank you, Steve. Thank you, Stel. Saeed, I'm going to make you the presenter now. Looking forward to talking to you. Just passed you the ball. You're the presenter. Welcome back to Face, Saeed.
Hello.
Hi, Saeed. How are you, buddy?
I'm not too bad. How are you?
I'm great, buddy. Thank you so much for coming and stepping up for me today to address our community. And I must say that you were a very popular interview. I mean, you got almost 2,000 views last time you were on. And you have a lot of fans. And then it ended up with an interview with your mentor, Michael Huddleston. Yeah. So thank you for what you did, and also you were right about the euro. So I've interviewed quite a few, but I remember you making that call, and it was spot on. So what's on your radar, my trading warrior brother?
I've got a few on my radar. My favorite plays are probably euro long, Aussie long, gold, and dollar CAD shorts. I think dollar CAD shorts is probably one of my favorites going forward. But overall theme, bearish dollar. I've got no reason to be long dollar, bearish dollar.
Okay. So last week was a nice setup with the dollar recovering to give you the levels that you were looking to
Yep.
established positions or even right in here. So go ahead, tell
Yep.
us what you see. I see a rectangle that we've broken down out of. Go ahead.
So as usual, when I do my top down, and especially we've got a new quarter starting now, so that means a new quarterly candle. And seasonal tendency as well. When it comes to April, I look at seasonal tendencies a lot because you get big rallies in April usually. So from the quarterly candle, we can see previous quarterly had a clean close below this support level.
Big rallies in what? Excuse me, in the dollar seasonally?
Against the dollar. So euro rallies, dollar CAD strengthens.
Got it.
So look at the monthly chart. We're cleanly below this range. This was the previous range. Consolidation, broke out of it, faked out, then smashed through it. Now we're in a range right now. You can obviously see. So the range I'm looking at, let me just get another daily, probably clearer. Yeah. So when the initial low we made on the dollar, when it dropped all the way down, was this. Then the first high that was made was this. Now that is supported, confirmed again. This range is when we faked out of this, pushed back in. So I see that as a deviation of the range. Then it popped out again and it got back in. So you can clearly see these two thick black lines. That's where price is being held. Now the question is it going to go high? Is it going to go low? We don't really know yet, but we look for clues inside of the range to tell us. So the last breakout of the range was here. So if we're just playing it as a range, we would expect price to come back down to the other side of the range. Now within that range, we've got a high, we've got a low. Here, we broke this low here. So I'm seeing that as a breaking market structure. Then I look at, okay, where did the move start from? The up candles that led to the move down. So here, we're holding that. So far, low, high, lower, lower low, lower high, lower low, and so far a lower high, which is going to plan so far with my expectation of going to the bottom of the range. Now this was the last up candle that led to the move down that took out these stops here. So I'm seeing that as a further breaking market structure, and I want to see if it's continuing with the lower highs and lower lows. I want to see this high hold. Now we've come up, this was the last up candle that led to this breakout. We come to this black line is the 50% of this. So far we're respecting it nicely. So that's not enough for me. So what I do is, are the other majors confluence in that? So to get better probabilities, more confidence behind this idea, I look at the other majors. So for example,
right now you'd have to say it's pretty neutral. It's in the middle of trading range, right?
Yeah. So what would confirm that or increase the probability of my trade would be a clean break of this range low, this low here. If we get that, then I can go in with confidence. So let's look at the euro. So I usually start off with the quarterly, okay? So the quarterly is still bullish. I'm sorry, that's the 6 month chart. Let's look at the quarterly. That's still bullish. And my target is this low here, short term. If we get above that,
27.5 or so.
Yeah, 127.50. So the last time we spoke, euro was around here, 120, and it pushed up there. So I'm going to go to the lower time frame. So that's just my high time frame bias. My target's there. So if I go to the lower time frame charts, again, I'll use the range concept again, and I'm just going to quickly draw. I've got a template saved just to save time. Euro range. So we've got once we broke out of, if you look carefully, see the last consolidation was around here. Okay, this high here. Price was below this. Once we broke out of it, the first swing low that was formed was this. Then it pushed up, made that high. Again, the same as the dollar index. This range high and this range low was confirmed with these two deviations and price coming back within it. Now, what I'm about to explain here is just going to be the inverse of the dollar. So it's the exact same thing, just the opposite. So what I would like to see is this low hold, and I'm seeing higher prices. So yep, that's one of my favorite pairs, and it'll be hard because we've got NFP this week. So once NFP is out the way with, then I think it'll be a lot more clearer. So the way I'll be executing is, okay, if this is the low, then this is the down candle that would have led to the move up. So what I'm waiting for is a clean move up. I want to see an impulsive move up, okay? And again, if I take a smaller range, okay, we can see this down move led to the move up out of this consolidation here, or a break of these highs here, okay? So I look at where exactly was the breaking points. This was the breaking point here. And you can clearly, this is further supported by market finding support here, and then when it broke down, found resistance there. So what would increase the odds of my trade would be a clean break of this, because if they were using this as support here and resistance there, couple that with a higher time frame bias, then there's a good chance they should find support here and lead to the move up.
So what I call false breakouts, you call deviations, and there've been quite a few. I mean, yeah. So it just deviated from a range to get all the buy stops and get all the sell stops.
Yeah,
that's
exactly.
What you're high and low. So there's shakeout areas, so that you know, no one participates in the move they were looking for, and then it happens.
Yeah, another pair that's really, so I'm gonna go over Aussie and dollar CAD. Now dollar CAD's probably my favorite going forward. If we look at dollar CAD, so breaking down, I'll start with a yearly chart for this. So each candle represents a year. This was the down move that led to the move up. Yeah. Took out these stops. Okay, if it was bullish, it should have continued, but it broke down. So they were buying here previously. So basic SR, if this was a 5-minute chart, it's just a retest of SR really, and it's rejected nicely. If we break it down further to the quarterly charts, okay, we made a high, low, lower high, lower low. This is the key support level. So far, all it is a pullback. As long as this high holds, I'm seeing a lot more downside. First target would be this low here, which comes around 124.50, 124.60, and then this here. Now, all we've done is retrace back up to the up candle that led to the breaking market structure here. So I'm looking for lower prices. Now, what supports that is, if we look at, for example, seasonal tendencies, right? This is a seasonal tendency chart. In April, CAD strengthens massively. It's one of the biggest months for CAD. Okay, so I look at this as supporting factor. Price has to confirm it first. These are secondary factors for me. So far, price is showing me that we could get reversal. Supporting it is this seasonal tendency, and I've got a COT data. If you look at the COT data from previous charts, right?
Yes.
Commercial, the red line, the commercial positioning here. So they were increasing longs here while price was moving down here. It came down, took out these stops here. Then it led to, I don't know how much of that, about 1,600 pip rally, I think, or 1,000 pip rally. Look what's happening again. Same thing again in April as well. Down move. Price has already shown signs of topping out on the dollar CAD or bottoming out of the CAD, taking out the stops. I'm expecting another huge rally. So if we break down price, dollar CAD, let me just clean this chart up. I'm gonna start with the monthly. So this is the down candle that led to move up. Once it broke, it acted as support, which is, and this is the quarterly as well. So the confluence of the both. Now, the biggest key for me was this. You see the stop run of 1, 2, 3 months worth of highs. And then once you break it down, you'll see clearer picture of what's happening. So the high is 129.195.
Yeah.
195.
Great looks, buddy.
So if we break that down, so all we've done is a stop run into that key higher time frame level for a short. Now, you can clearly see this was the move up all the way into that monthly level. Then it broke down. Now, this was the consolidation that led to the move up. So far, once we broke that, this was the first low formed. I'll do that in a different color so it delineates differently.
So a lot of people are looking at this as a potential head and shoulders.
Yes.
If we got a rally back to above that high, I think the left shoulder came in around 130. I don't know what time frame is it.
It's around 130. Yeah, bang on 130.
Would that change the picture?
No, so not necessarily. I mean, my complete invalidation. Well, so far, so if we look at it on a 4-hour perspective, it's a low, high, and so far it's a higher low. It hasn't confirmed the top on a 4-hour or daily basis yet. What would confirm it is a break of this low. Okay, right. So this is why when I go into the markets, I have a plan. There's one thing, you have a level marked out. There's another, is it going towards your plan? So I've got 3 scenarios for this. One scenario is we've got a clear range here. Okay, so if I go to the H1, this is one scenario. And the range is I'm using, if I get rid of this, is this low and this high. Why? Because this first low made and it pushed up. This was the first high made. Clearly, you can see price is struggling to break above that once, a couple of times here, and it's in confluence with that monthly level I drew out. So scenario one is, okay, maybe NFP wants one more squeeze up into possibly this level here. Now, if that happens, I'm not looking for a short just yet. What I'll be looking for is a breakdown. Now, if it breaks this low, that is what confirms my idea. So what I'll be looking for is, do we have any sign or area to get on board? I've clearly stated that this is the range low. If we make a clean break of that, that's a breakout of a range low. Also, you can clearly see this down move here that pushed up, they were buying here. So if we break this, not only is it an area where they were buying previously, but a support becomes resistance, and it's a confirmation that they've broken this low, interest to go lower. So that would be my scenario for a higher probability trade to short, and I'll be looking for massive
So
downside.
wait for the breakdown and old support turns into new resistance.
Yep.
That would be your short.
Yep. So this is one of my favorite plays, and I think we're going to go all the way down, to be honest with you. I think we're making lows. So if you follow the monthly plan, high, low, lower high, lower low, lower high, we're making lower lows, and couple that with the seasonals, couple that with the COT. One of my other favorite plays is Aussie dollar, and I believe we're going to get a massive rip in this. So here we had this massive consolidation here, but what led to the breakout? So this move here was the breakout. If we look closely, it was this candle here that led to the breakout. So we've come back below it, deviated from it, and then go all the way back above it. So we've got two confluences. We've got a confluence of this, and we've got a confluence of this as well, which was the last down candle that led to the move up. Bearish dollar expectancy. So what I'm looking for is possibly we're probably near a bottom now. Now, obviously, we've got RBA today. So what confirms it? Let's break it down to the lower time frame. We've got this low. Price is capped with this low here. So what I'll be looking for is if we can get a clean break of this post RBA, that confirms to me the low is in. And once the confirmation is in, then you can go in with confidence rather than picking a bottom and getting cut by 1,000 times. You've got confirmation now, and then I can go in full risk and then play the long side.
Okay. So were these the three that you wanted to show today?
I can show any. I'm not too bothered. These are just three on my radar right now.
Okay, I mean they're great views and great looks, and I like how you wait for confirmation and then wait for a retest of breakouts to get in. I'm just assuming with your bias of a weak dollar, stronger Aussie, weaker USD CAD that you're probably positive commodities.
Yeah, gold.
So the gold, the silver, the oil. Am I correct?
I'm very bullish oil, and I'm bullish gold. So gold again, it's the same thing because we've been in a range. You use the range to your advantage. So again, when this high broke, the first swing low formed was this low here. So we're just trading within this. Now I believe gold's bottomed out, and again, basic TA low high, higher low, higher high. This confirmed that this low should hold. So we've come back on a weekly basis. All we've done is come back into if I draw this out, the body of it, the down move that led to the move up. That's all it was. So now I think I was doing a video on this yesterday, but I was saying it was around here I think, and I wasn't sure if the low was in. I said if we smash through this, then that confirms this low should hold now. So I was looking for a pullback into here, and the only thing that put me off was because bank holidays across most countries to get long here.
Right.
But I believe the low is in. Now, what I'll be looking for is a pullback into here. If you can get pullback, so if I mark this out.
About 1328 or so.
Yeah, around there. So if I can get like a pullback into here, okay, ideally take this lower, then reject. That would be the perfect scenario.
Okay.
And then I'm aiming for, I know where price wants to go. So the key thing is, where am I wrong? I'm wrong here. Where's my target? Short-term target's there. I can even enter a market. As long as it's giving me risk to reward, I'm not too bothered about the entry. It's about identifying where am I wrong. And I'm wrong below this low, most likely. Because,
any hint on what the commercials are doing here?
You know, I haven't looked at it. I was looking at the bar chart. My bar chart.com wasn't working, so I couldn't have a look at it.
All right. So, your presentations are very efficient. I mean, you say a lot in a short period of time and pretty crystal clear. So, unless you have anything else to add, I'll thank you and ask
Probably oil. Now,
Okay,
oil. I'm a bit worried about this now, but if I quickly go into oil, bigger picture for me. So if I go into a 3-month chart, quarterly chart, we're still bullish this, okay?
Yeah.
Now it's a new quarterly, so what I'm thinking is, okay, if I'm bullish this pair, I'll have the quarterly open marked out, which is the same as the monthly open this month. So if I'm bullish, then I'm expecting any price action below the open to be the wick of the candle. So so far on the quarterly, there's no a bigger picture. This is still bullish, and what I'm aiming for is probably about here, which comes in around this low here, which is around 75s. So if I go onto this, right, where were they previously buying? Here, okay. So what I want to see ideally is this box hold. Why? It's a bit of a pivot point. Down move, left to move up, support, resistance, resistance. So here we've come down and we've taken out this low. Now, perfect scenario would be if we hold this low. If we break this, then most likely my bias will have to switch, and that's what I'm worried about. Now, for me to gain confidence, all I'll have to wait for is a break of the monthly open. So this is the monthly open so far, and I'm assuming anything below this is just the wick of the monthly candle in a bullish case. So what I'll wait for is a move up above the monthly open, let it do what it wants. Once it's above the monthly open, then I can say the low of the month is in, and we're going to go into the body phase of the candle and expect a huge expansion. And that's about it, really.
Thank you, buddy. A great presentation of every market I'm interested in, and pretty contrarian in a few. A lot of people have been trying to get long gold and Aussie for a while, and so people are still a little bit confused about Euro, especially since that false breakout we had last week. But some real nice macro views. I really appreciate you sharing your work with us, Saeed.
You're welcome. I think a lot of people get confused, especially when it's in a range. They forget the bigger picture of what's happening. I think the key point for the euro was this, where on this monthly chart, yes, when we got above here, this was massive buying was happening here. So if I draw that across, this down move led to the move up, support.
Yeah, well, so 121 is a bull line in the sand, isn't it?
It's a macro picture, but no one's going to use a 500,000 pip stop. But it just gives you a better idea where are we in the bigger picture of things. And nothing, the bullish scenario hasn't changed. All we are is just in a range. So everybody's calling a top here, calling a hardcore bearish, but not really. As long as we're within this range, the bigger picture hasn't changed. A clean break below this would change it, but till then, it's stick to the high time and just time it correctly.
Okay, buddy. So what's the best way for people to follow you besides your Twitter handle at Trader1SC? Anywhere else?
I've got a website, traderz.com, and it's mainly Twitter. So if anyone wants to contact me, it's just mainly my Twitter. Really.
Okay, and you also have a great YouTube channel, right?
And my YouTube channel, yes. I've got loads of content on my YouTube channel.
All right, well, I hope you have a great spring trading season, Saeed. And I do appreciate you coming here and crystallizing some things and confirming some things that we've been talking about and I'm looking at. So thank you again, my trading warrior brother. Appreciate it, and wish you nothing but success. I'm rooting for you.
Thank you very much. Have a great day.
All right, Saeed. Saeed Zaman, follow him at Trader1SC and at his website. The guy is excellent. Knows how to use a telescope and a microscope. See everyone for Turnaround Tuesday. Good hunting the rest of the day. See you in the private chat. And remember, don't just count your pips, count your blessings. We'll see you all tomorrow for Turnaround Tuesday. Adios. Thanks again, Saeed.